And at the moment you've got a strong dollar. And part of my view, really over the last 5 years or more, has been that dollar rise has been, if you like, in part a deliberate weaponization of the dollar against the Chinese yuan. And if you look at the trend in the dollar, which is illustrated on slide 9, you'll see there that the trend, and this is our preferred measure of the dollar, which is the real trade weighted exchange rate. If you look at that, it's very clear that the real trade weighted exchange rate of the US dollar has broken higher ever since the global financial crisis. There's a new trend forming. That trend looks remarkably robust. And if you flip to slide 10, the next slide, you'll see that dollar upswing is underpinned by strong capital inflows. Now, those capital inflows may well have lost a tad of momentum, but they're still positive and they're still driving the dollar higher. And I think that part of this move upwards in the dollar, or if you like, weaponization of the dollar against the Chinese yuan, has been reinforced by a deliberate devaluation of the Japanese yen, which is putting even more pressure on the Chinese yuan to devalue. And basically what I think the US wants is a China that has a reset, and that reset is basically a major devaluation of the currency in some form. Now, while we're on that subject, the issue really to think about is, what does the Chinese yuan devalue against? And everyone immediately thinks that they've got to devalue against the US dollar, but that's not necessarily the case. And the reason that it's not necessarily the case is that China doesn't really have a competitiveness problem against the US dollar. What it has is a debt problem, and that debt problem needs the paper money of China to devalue against real assets. And what that really means is that the yuan has to rise against gold, or the yuan gold price, in other words, has to go up. Now, clearly, if you've got a static dollar gold price and the yuan gold price rises, then by definition, the arbitrage must mean that the yuan dollar equally weakens. But I think maybe there is scope here for a deal, and maybe, just maybe, and I've got no insight, but it's pure conjecture, that maybe what the incoming Trump administration is looking to do is to do some deal with China. And I think they've definitely got to do a deal. It's in the interest of both economies to do one. And that deal, maybe, to solve everyone's problems, is an easing in China coincident with an easing in the US, a little bit like we saw back in the mid-1980s with the Plaza Accord in 1985, when then the problem was Europe and America, not America and China. And then it was a strong dollar, which the dollar had to come down. And ultimately what that meant was that the US eased aggressively ahead of the 1987 stock market crash 2 years before that. And ultimately the Europeans also joined in as the dollar began to go down. So it may be that that's what we're leading up to. But, note the fact in a sidebar that the yuan gold price is near an all-time high. I think it's going to go higher. That's what we should be looking at.